Okay, hello everybody. It's late Monday evening Easter time. It's like 2:31 a.m., actually Tuesday a.m. It's 8:30 p.m. My local time, and I wanted to make an update for the spreadsheet from last week and also show a few trades from Live Sim today and how some of the charts are doing. This is our 987 Heikin-Ashi chart that I showed earlier today in Jim's live trade video. Which reminds me, I just wanted to mention about Jim's live trading, and I just wanted to say that it's pretty incredible that we have not seen really a hard losing day from all the videos that Jim has sent me. I want everyone to know that those videos are real action, real time, real money on the line. There's nothing faked or insincere about it. It's not manipulated. It's trading as it unfolds. And, you know, I see a lot of competitor videos talking about, you know, trend trades and how the rules are the same, and, you know, guys that have, you know, Google Hangouts and they show trading, but you can't follow those trades. You can't get in those trades. The trades that Jim takes, those are trades you can get in the that you can get into in the Autotrader. These are intent is not to have a trading room where you follow his trades exactly, but certainly if you're using the same tools, you can employ similar setups. And what's different about us that's different about those other guys, and you know who they are, they're not showing videos of one of their traders trading live and having a win rate like Jim does, and, you know, talking in a non-sales oriented manner like we do. We try to keep the tone very conversational, very educational as best we can. At the end of my videos, I don't, you know, give a sales pitch, you know, buy our Autotrader and that kind of thing. But certainly we want you to use our products, but we don't push it. You know, my goal is to try to let the Autotrader speak for itself. Our software really speak for itself. It does what it does, and if you're a trader with bad habits and you're lazy, nothing's going to work for you. You know, there is time and effort involved in learning to trade. All right, so enough of my rant here. This 987 tick chart is a really good chart. I've made some observations from the spreadsheet. We're now, I guess, 6 weeks into the spreadsheet, maybe 7, and there are some helpful observations beginning to appear. Anyway, this is how far we are into the night session here, and, you know, a pretty big down day today, so not surprisingly, the overnight Globex session here is trading in a range, consolidating, and we'll see what happens tomorrow. But this 987 tick on the Nasdaq is doing really well. Really beautiful trade here. I forgot to mention in the volume profile, this dotted line is the developing point of control, and this changes throughout the day as the volume changes. And what you'll notice on this is you can see here how, as the day developed, that this 77.94 was the point of control when all this volume occurred, and then when there was more volume down here, and this became the point of control. And now we can see that tomorrow's high and low of the value area for the Nasdaq will be 77.92 will be the high of the value area, and the low of the value area will be 77.03, and the point of control was this high volume node here, which is 77.2925. These levels should be key levels in the market tomorrow. And then, of course, extensions to the downside. Certainly the low of today will be a key level, but that's very near the low of the value area. Let's take a look at a few other charts. Okay, the crude oil and 150 Heikin-Ashi started out rough. We had 2 losers and drew down 350, but then came back with a couple of really nice winners. And all of these were below the open range filter here. So these 2 winners, this was a nice counter trend trade here, but it wasn't taken because we were below the open range. But these 2 trades actually brought us to our goal. So that was a $700 swing from our drawdown. and our daily profit target here is 500 and a 400 loss limit. One observation I've made about our templates is I'm going with about a 20 to 25% differential in profit target and loss limit. So I'm adjusting my loss limits to be 20 to 25% or maybe even 30% of the profit target. That way, when you have losing days, it's not equaling your winning days. So that allows you to get ahead a little better with a better win-loss ratio. Okay, here's a great example of that automated trade off the open with the Step MA filter and the open range filter. This trade took place about 40 minutes off the open. It's set up, but still turned into a really nice trade as the market kind of broke this level and began to somewhat accelerate to the downside. This was a really nice trade, and on this one I again went with this 20% differential in profit target and loss limit. Okay, the DAX on a 377 Heikin-Ashi had a small loser and then this nice winner here, and I believe it came up and hit its goal. No, just shy of its goal. This did 450 for the day, and again that differential here. So it didn't trade again after this, but it had this identical trade yesterday, and I did make a screenshot of it. So let's pull that up. Notice this is from the 24th here. You can also see it up here in the chart, the 24th. And now here's a screenshot of yesterday's trade, and you can see in the title bar the 23rd. And so a very similar setup, except this was a long and this did 462.50. So quite interesting on the DAX 377. Two identical setups back to back. So similar action on the Nasdaq 1597 Heikin-Ashi chart. There was a small loser here, and then that was followed by two winners here, and this did 585 for the day, and the profit targets I changed here. Okay, moderately active on the crude oil 150 tick line break chart. Really excellent trade here, which would have been a winner had we not had this loser. This probably would have hit our goal. So we had some mixed action here, and then another spectacular long trade here, and then finally a small winner here brought us to our goal of 500. So we have 500 and 450 on this chart. So I'm trying some new time frames. I want to add more charts following the crude oil and more charts following the Nasdaq. So one of the things I've learned from the spreadsheet is to take the most winning charts and try to develop templates for that market based on a previous winning template. Just modify and adjust it to the market you want to trade. So in this case, we got the crude oil on a 987 tick with the open range filter, and there was a couple of small losers here. The drawdown was only 156, and then that came up and hit our goal of 500 on two contracts here. And on this one, I do have that 20% spread, a 400 loss limit, 500 target. Okay, this combo seems to work really well. Jim is using something similar to this. The DAX on a Super Renko 6 tick with the open range filter and Step MA filter. And so we had a small loser here, and then two back-to-back winners brought us up to our goal. And on the DAX, I have some higher goals here. So on this one, it's about a 30% ratio, 650 profit target and 450 on the loss limit. Okay, the E-mini S&P on a 987 Heikin-Ashi tick chart, there's something to be said for this 987 Heikin-Ashi time frame. This works well in a number of different markets, and here is no exception. A beautiful open range trade about an hour after the regular session open and hitting its target in a single trade here. Let's take a look at the spreadsheet and see how things are looking up after we've been tracking these charts and markets for about 6 weeks now. Okay, so here's this week so far, just a couple of days, and you can kind of see all the charts here, how things are shaping up in the E-mini S&P, and then I'll go over to last week. So here is the trades for the entire week last week. Not a really great week, but there were a few standouts, notably the Superenco 4 with an 8 higher time frame, and this chart here, the one at the very top, the Superenco 6 with a Superenco 6 higher time frame, very consistent and I believe the best performing E-mini chart. So I'm going to test some new charts, and I'm going to use this type of setup, something very similar to what I have going here as I test new charts, as this is one of the top performing templates of all of them. Okay, the DAX on Monday, I forgot to roll over the contract to the December contract. I did roll over the 377 Heikin-Ashi chart, but not the rest of them, and that's why you don't see trades here, and also these two didn't trade. I'll go back to last week, and pretty lackluster on the DAX last week, definitely not good. So we'll look at the summary page in a minute. It doesn't mean a whole lot at this point. Here we have the Nasdaq. Now the Nasdaq looking pretty good. This is yesterday and today, so starting this week off really, really nice. All the charts are in the green, very solidly in the green. And then here is last week on the Nasdaq. Not as good as the start of this week. So here's the crude so far, and again this Crude Oil Superenco 8 making quite a comeback. Let's go back to last week, and this is what we have here in the Crude Oil Superenco 8, the top performer. And so that about covers all the charts. Let's look at the summary page. Okay, here is the summary page for the ES and the Nasdaq. Even though some weeks or days may look bad when you look at this over time, keep in mind most of these are a single contract. So this Superenco 6 with the higher time frame of Superenco 6, if this was a $5,000 account, you would have over doubled your money in 6 weeks. You would have better than a 100% return in just 6 weeks. If this was a $10,000 account, you would have a 63% return in about 6 weeks. So this all needs to be put in perspective. These profit targets or the goals, actual performance so far on this chart. Again, a $10,000 account would be 33% return. If it was a $5,000 account, it would be 66% return. Even the lowest performing chart here at 1307, if this was a $10,000 account, you're still up 13% on margin or your account size in just 6 weeks or so. So to have all these charts on the E-mini S&P and only 2 showing in the negative, very, very minor in the negative, is a pretty strong statement. On the Nasdaq, some patterns are beginning to be revealed here. It looks like we have 3 very strong charts and 2 laggards. And then coming over to the crude oil, not spectacular gains, but once again, most of these are a single contract. This one, the crude oil 8, has come back from a $6,000 drawdown. That's pretty strong. And if you remember, when it drew down that much, I said I'm not giving up on it because I know it's a good chart, and certainly it recovered from its drawdown. And that's pretty impressive because most traders think very, very short term, and they wouldn't give things a chance. So I'm sure a lot of traders would have quit trading this chart just as it lost 4,000 or 5,000 and just not given it a chance, where here in just a few weeks it came back and is in the green. Now the DAX, kind of mixed results here. Still looking like the Heikin-Ashi 150 is the top performer, followed by the 34-tick line break. This is all mostly the 9:30 session, the US session. I need to run all of these charts based on the 3 a.m. session as well. But there's still some good information here, and I think these charts will come back. I think we're just in a in a period of drawdown, and I think these charts will perform well again. I want to track more charts on the DAX, on the crude oil, and on the Nasdaq, at least as many as the E-mini S&P. And of course, there's no substitute to do what Trader Jim does and help the auto trader by taking a bias, long only or short only, that kind of thing. All the charts I'm showing here are fully automated with no intervention, no added manual trading involved. This is 100% automated. So overall, I think it's a pretty good showing and pretty impressive. That's all for this video. Thanks for watching.